welcome to our channel Stocks Factor. Hope you are doing well. In this video, we are going to discuss that how to identify good quality stocks to accumulate in a correction which happens in a bull market versus the trading opportunities which we can find in such corrections. So friends, without wasting time, let's quickly jump to our dashboard. So we'll start with the correction which has recently happened in the market, and already you have seen that there has been almost 9% correction in Nifty from the 52-week highs. From the recently 52-week highs, market has already corrected 9%. So this is a correction. This is not a dip. This is a correction which has happened. So as you already know that last year we witnessed a huge fall in the market in the starting of the year during February and March due to the virus news which first came, and we witnessed a huge fall in the market, and after that we have seen a magnificent rally and we are in a strong bull market. And you might already know that in the bull market we also witness corrections, and those corrections are very sharp. So recently we have witnessed one such correction which has led to the fall in Nifty of almost 9%, and now this gives us an opportunity to accumulate good quality stocks for the long-term portfolio. So the people who might have missed the rally, or the people who feel that they were not able to accumulate good quality stocks when the rally was happening, so such corrections give us an opportunity to accumulate good quality stocks. You might have heard a very famous quote that sell your mistakes in a bull market and buy your regrets in a correction or bear market. So with that note, we are going to see how to accumulate good quality stocks for long-term portfolio in such corrections which we missed earlier in the rally. So friends, quickly we will go through some points which will help us to identify good quality stocks. So the first point is the business understanding. Business understanding means we have to identify the businesses in which we anticipate a very good growth in the coming years. And for that we need to understand some of the fundamentals and few aspects of our economy. And for that we need to ask questions. Ask questions to ourselves that what businesses can give us growth in the long-term future. So to answer this question, we'll quickly go back to our dashboard and we'll do a sectoral analysis, and we'll see which sectors give us an opportunity to accumulate good quality stock in such correction. So we'll start with the businesses and the sectors in which we have witnessed huge selling, and we'll see the long-term opportunities in such sectors to accumulate good quality stocks. We'll start with the banking sector. As you all know that banking is the backbone of any economy. And recently we have witnessed a good correction in the banking sector, and we have already seen almost 16% correction in Bank Nifty as compared to the 9% correction in Nifty. So now for the long term, banking sector provides us an opportunity to accumulate good quality stocks. And as you know that we have very good quality stocks in the banking sector, especially the private sector banks, and this correction can be utilized to accumulate good quality stocks like HDFC Bank, ICICI Bank, Kotak Bank, right? So such banks are large cap banks, they are established businesses, and this correction provides us an opportunity to accumulate such stocks. Now friends, we come to another sector which is very promising and which you already know that Indian economy is a consumption based economy. So right now, which are the stocks which are related to consumption? You need to ask yourself that question, that which sectors can benefit from the consumption growth. So any sector which is related to manufacturing provides such opportunities. For example, directly if we jump into the Nifty consumer durable stocks, you will be able to see all the stocks which are related to consumption. For example, Bata India. So you understand that Bata has a very good established business, and Bata majorly focuses on footwears which are related to the schooling. Now if we see other sector, for example, real estate sector. So real estate sector also for the long term provides such opportunities because construction is continuing and we are a developing economy, and the construction will continue. The infrastructure will happen to grow in our country, and due to that the real estate stocks are bound to grow, right? Now this also gives us an opportunity to identify the stocks which are indirectly related to the real estate sector, because if the real estate sector rises, those stocks are also bound to rise. For example, Havells. We saw in the consumer durables that when the houses grow, wiring is also needed. So Havells, so such company is also bound to have growth in business, and due to that we will see growth in such stocks, right? Now we come to other stocks. For example, IT sector. We have seen magnificent rally in IT sector, but you already know that going forward, IT is the backbone of every business now. Whether it is the banking sector, whether it's the consumer durable sector, media sector, oil and gas, everywhere you need IT to provide the support to handle the operations. So IT is one such sector which is bound to grow because it is now helping all the businesses to grow. So from IT sector, we can identify good quality stocks, especially the large cap stocks like TCS, Mindtree, Infi. These all stocks are bound to grow for the long term. So such corrections can be used to accumulate such good quality stocks. And then now we'll talk about two more sectors, and then we'll quickly jump to some analysis. So the last two sectors are Nifty FMCG sector You understand that in a consumption economy, FMCG sector is bound to grow. So people are going to spend money in such sector. So we are bound to see growth for the long term. So such dip again can be utilized to accumulate good quality stocks in the FMCG sector. And last but not the least is the auto sector. So friends, auto sector poses again a very good opportunity for us, because in the auto sector from the last 2 years, we are already seeing a huge disruption due to the electric vehicle concept, and this is bound to grow, and such disruption will be very good for the economy for the long term, because now we are witnessing more innovation in this sector, and due to the government push to the electric vehicles, companies are now working on that, and we will witness a very strong growth in this sector. So the stocks like Tata Motors, Maruti, Ashok Leyland, they are all working dedicatedly to produce electric vehicles going forward in the next 3 to 4 years, and we are going to witness a huge growth in this sector. Also the two-wheeler sector, these companies are putting a lot of efforts to bring the cost down for the electric scooters and building up the infrastructure to provide support to the vehicles. So we are bound to see growth in this sector also. So auto sector again gives us an opportunity for the long term, and this dip can be utilized to accumulate good quality stocks, right? So now friends, we'll quickly go to the Nifty stocks page, and here we will see again we have listed all the stocks which have recently corrected in the percentage terms from the 52-week highs. Now you see that Nifty has corrected almost 9%, and the stocks we can see here the list of all the Nifty 50 stocks and the non-Nifty 50 stocks, that is all the FNO stocks you can see here. So here from this graph, this will help you to identify which stocks have corrected a lot as compared to Nifty, and which are good businesses which provide you the opportunity to accumulate the stocks. For example, we talk about Hero MotoCorp. It has almost corrected 30%, right? It is a significant correction from the 52-week high for this particular stock. You understand that Hero MotoCorp is a very good company. So 30% correction for the long term is a very good correction, and we can accumulate such stocks. So similarly, you can use these two charts to identify the stocks, to understand their businesses, do some research at your end, and then identify which stocks to accumulate. So friends, up to now we briefly talked about that how to identify businesses and then select the stocks according to the businesses. Now friends, we'll use another criteria for stock selection, and that is performance compared to Nifty. So what we'll do, we'll quickly go to the stocks hotspots page. We'll do a kind of mix of fundamental and the derivative or the technical analysis in order to identify the stocks which we can accumulate for the long term. So friends, as we already saw that we have seen that Nifty has corrected almost 9%, and it is very close to the 100 DMA. It has actually come below 100 EMA. So if you see any candlestick chart and the daily chart, you will see that Nifty has already come below the 100 EMA. So now what the criteria for the stock selection is. So as we have already talked this very much in our videos also. So what we'll do, we will see, or we will filter the stocks which have outperformed Nifty in the correction, right? And what will be the criteria for filtering that? First we'll filter on the criteria which has corrected as much as Nifty has corrected, or which are at the levels at par with Nifty. For example, as we talked about that Nifty is near 100 EMA. So what we will do, we'll quickly select all the stocks which are approaching the 100 EMA, right? So what we have done, we have filtered the whole page, and all the stocks will be listed here which are near their 100 EMA, right? And we'll go to this table. Obviously, we'll be interested in the stocks which are in the strong uptrend, that is their 20 is greater than 50 and 50 is greater than 200. It means the stock is in a strong uptrend, but the price itself has come below 20 EMA and it is close to the 100 EMA. And in this table, we can quickly see that there are a lot of large cap stocks which provide us the opportunity, right? For example, the banking stocks, HDFC, ICICI, Kotak Bank, these all banking stocks has also come near to the 100 EMA, right? So using this technique, we can accumulate the stocks which have not underperformed Nifty, which are at par with the Nifty. So this is one way of selecting the stocks, right? Now, another way of selecting the stock can be, we will identify those stocks which have outperformed Nifty. For example, Nifty has come near to the 100 EMA, but we will select the stocks which are near to the 50 EMA. So it means they have not corrected as much as Nifty. They have not come to that level, but they are a little above the level to the Nifty, and which are again near to the crucial moving average. And as you can see, these are all the stocks which are near to the 50 EMA, and they are in the strong uptrend, right? So for example, Canara Bank, we have seen magnificent outperformance of Canara Bank recently as compared to the benchmark Nifty and the Bank Nifty, right? So this is again very close to the crucial moving average of 50 EMA. Similarly, we can see other stocks, for example, Mindtree, Havells, we talked already about that. and Titan. So such stocks we can keep in our portfolio for long term and we can accumulate few stocks. Now we'll quickly talk about PSU stocks also. For example, as we can see ONGC. So historically you have already seen that PSU stocks are not bound to give a good return for the long term, and they have been mainly used for the dividend opportunities or the trading opportunities. So when I say that these stocks have not contributed much to the long-term wealth creation, the only point is people accumulate those stocks generally because these stocks provide dividends, and whenever there is a news about dividend, the accumulation starts before that, and as soon as the dividend is declared, the investors, they actually sell those stocks, and we have seen this cyclical trend from many years. So the only way they can give us the long-term growth is when the government starts privatizing these PSUs, and we have already heard the news that privatization is going to take place in some PSUs, and we can keep track of that. So we'll talk more about PSU stocks in a separate video in which we'll see in which stocks such opportunities exist. So friends, these are the ways which we have talked about. Using this page, using the hotspots filters, you can actually use those filters also to identify good quality stocks to accumulate in such correction apart from the trading opportunities. Now very briefly, we'll also talk about the trading opportunities, and mainly we'll talk about positional trading, because we have seen a very good correction in Nifty. So we are not thinking of 1 or 2 days or 5 days, right? Now after this correction, the pullback may come after a while. So definitely we would also want to identify some trading opportunities, but our perspective will be at least for 15 days to a month. This provides us a positional trading opportunity, right? So using the same filters, using the same technique, we can also identify the outperforming stocks which are outperforming Nifty in such fall, and as soon as the bounce comes, these stocks are likely to give good returns as compared to the other stocks, because since they have outperformed Nifty, they will bounce faster as compared to the other stocks, right? So for example, when we talked about filtering the stocks on 100 EMA or 50 EMA, you can use this technique to understand. So for example, when we talked about Canara Bank, so you can see, for example, Canara Bank, it is also very near to the support level, and we have seen a good put writing at 200, right? Almost 23% writing at put 100. So 200 is likely to act as a good support for Canara Bank. So we are into the stocks analysis page, and if we quickly scroll down to the option premium graph, and if we quickly hover on the 200 strike price, so we can see that the put option premium is 8 rupees, right? Now, if you see that there has been a good put writing but also call writing at this level, but 200 strike price also happens to be the 50-day moving average, and this is likely to provide us some support if the market supports. So if we look at the option chain, so 200 has the maximum put writing as of now. So now how we can utilize the opportunity? So we have 8-point room, so starting from 200 till 192. So the option writers which have written the puts at 200, they have a break-even point up to 192. So now what the strategy can be, we can utilize any intraday dip towards 192. For example, 194 to 196 zone can be utilized to accumulate the stock and keeping a stop loss below 192, right? Because below 192, the option writers will also start incurring losses. So this would be our strategy to accumulate the stock. Now friends, you may also ask the question that can it break the support levels? Yes, definitely it can break the support levels if the market corrects further, if there is a broader selling in the market which continues on the next week also. But the point is that for trading purposes, we are looking for good risk reward ratio. And if the market supports, there are chances for the stock to bounce from the crucial support levels. And this happens to be a crucial support, right? So in terms of probability and the risk reward, we are looking a good opportunity as per the data, and we can utilize this opportunity. For example, the stock bounces from this level, the bounce will be sharp. So putting a stop loss, we'll use this opportunity to accumulate the stock. Whether we want to trade in the cash market or in the derivative segment. For the derivative segment, definitely either we will use strict stop loss or we'll keep our positions hedged. So the point is, we will not look for the shorting opportunities in the stock when the stock is near the crucial support levels, and we'll wait for the crucial support levels to break in order to identify the shorting opportunities going further. So similarly friends, you can use these filters to identify the stocks. For example, you can also filter on the criteria that the stocks which are outperforming Nifty, right? So using this filter, it will further filter down the stocks. The stocks will be very limited, but you can still see there are some good quality stocks on the bottom table which will further provide us the opportunity. So friends, please do use this filter, not only for the trading purposes, but in such corrections you can also use these filters to accumulate good quality stocks. And last but not the least, we'll quickly cover one more important topic, that how much to accumulate, right? And for that, definitely we will go to the FII DIA activity page. Friends, we have seen that FIIs have been selling like anything, and we have seen a huge selling in the cash market. They have almost sold around 96,000 crores from the past 6 months. If you sum up all these numbers month on month, you will see that they have already sold around 96,000 crores. That is a huge selling which has been done in the past 6 months by FIIs. So at some point they are definitely going to put a break on this selling, but we have to wait for that, right? But we have to utilize the opportunity also. Now coming to the question that how much to buy. So friends, that depends totally on individual and the capital they have and the risk appetite. So we have discussed this in our previous videos also. For example, if we talk about high level, if an individual has a capital of 1 lakh rupees and they want to deploy in such correction, they can think of deploying 30% of that capital, for example 30 to 40,000. They can buy the good quality stocks using the way we have selected the stocks. So again, if you have more capital, for example 5 lakhs, so you can deploy again the same approach, 30 to 40%, that is 1,50,000 to 2 lakh rupees in such correction, and you can identify such stocks and buy such stocks for the long term portfolio. So apart from the trading opportunities, we should also focus on the wealth creation, and we should utilize such corrections to build a long-term portfolio also. So friends, with this note, we come to the end of this video. We wanted to keep this video short, so we might not have been able to cover all the points. So that's why if you have any question regarding this video, we will definitely answer your questions in the comment section. We recommend you to ask the question in the comment section of this video. And friends, if you have not subscribed to our channel, please subscribe to our channel so that you can get the notifications of such videos which we post every week. And if you want to get the access of our dashboard, please visit our website www.stocksfactor.com. See you in another video. Take care and goodbye.